All right, traders, it was a good day out there just as far as clarity goes, and we'll talk a little bit about what we anticipated from yesterday's video. So drew this is the exact same drawing that I started right here at the end of the day yesterday. This was best case scenario for the bulls. So what did we get? We got the beautiful consolidation that we wanted, and again, just a rough visual, but right where we wanted. 4-hour bull flag, bulls show up first thing this morning. Everything looks great, right? Looks like bounce continuation, bulls breathing a sigh of relief. All we got to do is confirm that 4-hour trend change. And right at that resistance, we rejected to the decimal point on this futures chart and then dumped. So rejecting is red flag number 1, and then obviously breaking the 4-hour support is big red flag number 2, big red volume, and the bulls didn't prove it. The bears are keeping daily bear flags alive on a lot of individual names. And if you look at NQ, this is a perfect example where if you are tunnel vision and you are not watching all these moving parts, it is much easier to get faked out. Because if you're watching only, this is the NASDAQ futures, which is relative to QQQ, but if this is all you were watching, or if QQQ is all you were watching, you were faked out big time today because we confirmed the 4-hour trend change. We got that bull break with the higher low and higher high, and QQQ looked better to start the morning. And we could see that where we were positioned at about 8 a.m. this morning. Okay, if we are going to break, NQ is going to break first, but we must ensure that the broader market follows along behind it. When we talk about wanting all the wind at our backs in the direction we're trading, we talk about our 3 major sectors, the tech, financial, and healthcare sector, and we know that at our strongest, we're all hitting the high of the day at the same time, or if it's bearish, we're all hitting the low of the day at the same time. But the point is we're watching all 3. So in this instance, the NQ, the NASDAQ bulls, get their break. They plow through resistance and they're looking ahead. Great, we're going to have a solid green day. Bounce is getting followed through. And you look over your shoulder at the S&P 500 futures and they smashed into their resistance and fell flat on their face. And that is a red flag where you know, okay, I am a more confident NASDAQ bull if the S&P 500 is joining, and as soon as you see that rejection, it's red flag number 1. So we have to be watching all these moving parts. We also saw the dollar bounce. The dollar bounce led to a pullback in stocks, metals, and crypto. Again, that is not surprising at this point. We've been watching this relationship for a long time, and where we stand heading into tomorrow, it's not game over for the bulls, but the burden of proof remains squarely on their shoulders. And what I would have to see is a 12-hour trend change here with just a save and then a significant follow-through move. That's a possibility. It's not just, the bulls aren't just going to roll over and give it to the bears here, but it was a notable rejection, and the bears confirm they still have strength at this point. So looking at SPY on the daily time frame and remembering that the upper wick, this was an example of a 15-minute bear flag that I was looking at the end of the day. So again, using the fibs because I was trying to explain it to someone. And they said, well, wasn't that bounce big enough that it wouldn't be a bear flag? And I said, what retracement level did we get to? And the answer is, there's your 382 right at it. And there's your bear flag dropping to a lower low. But the daily chart, is this a daily bear flag? Sure as heck looks like it. Watch your mouth. 382 right up to that level, and here we are back down towards support. 332.88 is in play tomorrow, and it's in play overnight tonight. Bulls really want to hold that level. And if we break that level, we drop to a clear lower low. The bear flag is confirmed. The bears prove themselves more notably. If we hold that level, we're going to trade within a couple-day tightening range, and that will carry over through the weekend. But so far, we can say bears are keeping their complete control. Looking at IWM, daily bear flag. We're just looking right back down at support of 149. If that level breaks, the daily bear flag is confirmed, and we then have a clear new daily lower high to be watching as our most important short-term resistance level. QQQ, same thing. That low of 269.66 is the key support level. I entered QQQ short at the end of the day here to, again, hedge long positions. I had a swing in OSTK, which had a huge move this morning, up 25% or something. Locked in half of it this morning, locked in the second half towards the end of the day here because I wanted to lighten up my long exposure in my account. I'm not generally swinging much as far as size in capital. And with this hard rejection, I want to lighten up a little bit more. So I'm all out my OSTK swing. I have my GLD swing. I have my SPY no touch position. I have some USMJ swing. And I entered a little bit of QQQ bearish at the end of the day here, just again to protect against that long exposure a little bit. So QQQ, potential daily bear flag. XLV, same story. You get the idea. So support of 103.67. If that level holds, the most important levels are that low and the high of the bounce 106.67. And we'll watch for a tightening range on the 4-hour time frame between those levels if we can see some bounce from here and if the bulls can save this support. XLF already dropping to a lower low. That's notable. And 24.23 is the most important support level because that is our weekly higher low. And if that level is lost, the weekly uptrend is lost. Another important point, Trump went live at 3:30 to talk about how good everything is. And I honestly didn't listen, but I can say that, yes, his words had an impact and the timing of the press conference was intentional at the end of the day. And this is him beginning to talk and not really much follow through. So again, if we see, Trump coming on and trying to calm the fears of the bulls and it's not working, that's also another big point in favor of the bears. Can't say that it's not working at the moment. We would have to see these daily bear flags confirm. Biotech sector, daily lower high is set. Still a ways above that support, 164. We've got about 4% to work with. So further from a confirmed daily downtrend, or I should say a confirmed new lower low, than most individual sectors that we just looked at. Semiconductors, daily lower high is set, all about 163.57 support. And the VIX, daily higher low trying to form. If we get the bull break of 30.60 tomorrow, higher low is set. Again, these exponential moving averages are such good visual guides. And we're bouncing off that level and trying to set a higher low. If we do, we'll then watch for a lower high compared to 38.30. And just to go to a trade review today, I had a pretty good day, just day trading names. And PENN bullish was my focus this morning. Blue sky breakout. And what I was doing is using my EMA levels. EMA 12. Look at the 2-minute time frame. We start with a huge rally. Blue sky breakout. Bulls in complete control. And I see this 6 minutes of pullback. And I say, okay, declining bear volume. The most likely scenario is a 2-minute higher low compared to the low of the day. I'm going to make a bullish entry and begin scaling in on that 2-minute exponential support. So I made an entry. I should have my exact levels up, but I don't. But made an entry, sold half real quick, sold the second half on the bear break to lock in a short-term gain. As soon as that happened, I zoomed out to the 5-minute time frame. And what did I look for on the 5-minute chart? The 12-period exponential support, and we bounced right off of it. Same thing. Sold half initially after a small bounce to give me more space to work with. And then we just had a 2-minute equilibrium tightening up. And that was that. So it went from one time frame to the next, playing off those exponential moving averages, knowing a higher low was the most likely scenario, at least initially on that time frame, and positioning myself in low risk, decent reward scenarios. And again, just base hits, day or two maker out of those trades. The dollar, doesn't that look like a daily bull flag? Well, our stocks and our sectors look like daily bear flags. If we see a bull break of 93.66, it'll be very notable. That will confirm the daily trend change, and we will zoom out and we'll look at weekly exponential resistance as the next level to be tested. But you better believe that this dollar bounce, in my opinion, is the reason that we have the significant stock weakness today, that we have some decent Bitcoin weakness. I guess it wasn't that decent. Hourly time frame marked the high of the day when stocks hit the high of the day, but the pullback hasn't been nearly as significant. Potential head and shoulders pattern right now. And gold, same thing. They all topped out at 10 a.m. These correlations are a thing of beauty. So gold, is this our daily lower high? Entirely possible. If we break the low today, tomorrow, that will be our lower high set, and we'll be looking back down at 1906. But at this point, those levels are close enough that I'm just using 1900 as the key level. I will stop out of my position with a small loss in GLD if it breaks. Wouldn't be surprised for that to happen after today. Silver, key support 25.84. Miners, potentially our lower high being set. If the low of today breaks, that's the case, and we look back down at 39.29. Clear resistance rejections. What stands out about all of our tops? Gap up, gap up, gap up, gap up. Doesn't mean if it's going to be, doesn't mean if we gap up, it's going to be a top, but that is clearly a relationship between all of them. Oil hasn't even started its daily bounce. Inside bar yesterday, inside bar today, and it's a weak bounce at this point. Have to hold 36.13 and break 38.45 if we're going to see bounce follow through. And natural gas getting a bit more bear follow through. Again, still looking for a weekly high or low, but the odds of a weekly bull flag are diminishing every penny lower that we drop. So fairly quick summary here. Again, it's all about the lows. All individual names, all sectors, all about our low and whether or not daily bear flags are confirmed. It's all about that dollar resistance and whether or not the daily bull flag is confirmed. And it's going to be an interesting next week, especially if we don't break support tomorrow and we end the week within that tightening range. And then we're going to be looking towards quad witching. I believe that's a week from tomorrow. It's exciting. Correlations. I cannot stress them enough. They have helped me with my trading game. What am I trying to say? The biggest leap that my trading has taken was 5 years ago starting the chart guys for a number of reasons. Number one, every trade that I take, I'm having to think out loud and explain to people. Number two, I'm explaining all these concepts to people and they're solidifying and becoming more clear for myself. And number three, I'm covering way more stocks, sectors, and everything else in the market than I was when I was trading by myself. When I'm answering people's questions and I'm looking at all these different sectors, I have a much firmer grasp of the big picture with all these intricate little puzzle pieces with how things are moving around. And that has made a significant difference as well. I hope you're well. Do good things. Went back to the Chart Guys Trader House today. Finally done the repairs from the flooding. If you don't know what I'm talking about, there's a video on our YouTube channel called TCG Trader House. So looking forward to starting to get some furniture in there and slowly working towards getting the ball rolling. But at least the house is back to where it was when I bought it. See you tomorrow.